What's going on in the pre-construction world, and why is Canadian capital fleeing from Canada? Why are the people not investing in Canada anymore? And what's going on with our mortgage delinquency rates? Hi everyone here. So let's talk about these three questions today as part of our market updates. So if you look on the screen, pre-construction is struggling hard. This is even worse than the resale market we talked about before. So on the graph on the left, you can see this point is the latest data point, okay, Q2 25. Guess how many pre-construction condos sold in the second quarter of 2025? So in these 3 months, April, May, June, in the entire Greater Toronto area, including Hamilton, okay, including Hamilton, GTHA, only 502 sales in the pre-construction condo, okay? That's like less than one building in the history. Remember, like one tall building, if we sold out, that's like 500 to 1,000 units. And this is saying in 3 months, the entire GTA, including Hamilton, did not even sell like one big building. That's crazy, right? And that's 91% below a 10-year average. Okay, so 91% means like we're not even 10% of average, not even comparing to these peak years, just on average. We're not even 10% of 10-year average. So on average, every quarter, every 3 months, we should sell, let's say 10 of these buildings, and we only sold one. So that's very, very little sales in pre-construction, right? But on the other hand, in 2025, completion of pre-construction is a record high at 31,422 units. So we completed 31,000 and we sold like 500 per quarter. Times 4, let's say we sold 3,000 per year, right? That's like less than 10% of what we're completing. That kind of also shows that why we're only 10% of historical average when we're selling, and we're completing about 10 times of the unit that we're selling. But next year, the good news is next year, in 2026, we're only projected to complete 18,000, which is less than what we're completing this year, right? 31,000 against 18,000 next year, which is a significant drop, but it's still a lot. It's still a lot of completion next year. So if you're expecting condo market to have a lot less inventory next year, I would say don't count on it because there's still a lot of completion coming up, and the units coming up completing next year probably they bought them at a higher price too. So speaking of price, out of the 4,900 new condo units that reached occupancy stage in this quarter, most of them were sold at $1,187 per square feet. Okay, so almost $1,200 per square feet. Okay, with new buildings, the resale market in the past year averaged only $900 per square feet. So anybody who's completing, who's going to occupancy, ready to close a condo building, on average, the difference between what they bought it at versus what they can sell in today's real estate market, in today's resale market, it's about $284 per square feet difference, okay? And that's about, let's say, 20%, okay? Down from what they bought it at. That's a big difference because 20% often is people's entire down payment. And as soon as they close the building, the value has dropped 20%. It's like buying a new car. As soon as you drive it off the parking lot, your value probably dropped by like 5 to 10% right away, right? So this is kind of similar to that. So anybody who's completing pre-construction closing now on the condos, just be mentally prepared for this risk, right? You got to talk to your bank ahead of time to make sure your appraisal value and your loan is good. And also you got to make some plans to what to do with this unit because the value has dropped. If you sell now, you're going to lose a lot of money, right? Plus fees and taxes. But if you wanted to come back, then it will take some time, a good amount of time to come back to what you bought it at. Then you need to buffer some extra budget in case you have a rental shortfall, you have like a negative cash flow. Like how many years can you budget for a negative cash flow before you absolutely have to sell it, right? So that's another calculation you should be making. So if you look at the graph on the bottom right, it's saying that record high, about 2,478, like 2,500 new condo units that were completed and available for purchase from developers. Okay, this is interesting. And that's 100% increase from a year ago. This is 100% increase. So this is saying that the builders have sold a lot of units, okay? but there's a remaining inventory they did not sell during the pre-construction selling stage. Builders usually keep some units to sell in the end, hopefully to sell for a higher price than 5 years ago when they were pre-selling the building, hopefully to make some more money in the end. But because the market took a downturn, now these builders are holding on to these units that they cannot sell. And this inventory is real inventory, because if they don't sell them, they'll have to rent them out, right? Or sell them cheap. Like they cannot keep them vacant. Even builders, right, can't afford to keep all these units vacant. And these units are actually building up more and more and more inventory in this sector. And that's a problem, because now not only are the resale sellers competing with each other, builders are coming into the market with these 2,500 inventory and competing in the resale market with regular condo sellers like you and I, where we have 1 unit to sell, and builders have 2,500 units they want to get rid of, and they're probably competing with you, right, to try to get rid of these units as soon as they can. And that's why they're probably causing trouble for you to try to sell your units on an assignment or something, because they want those assignment buyers to buy their remaining inventory instead of buying your unit, right? So that explains why it is so hard to sell assignments, is another factor. And if you look at the months of inventory perspective, just how bad this builder remainder inventory is, there's 2,500 inventory, right? And in Q2, they only sold 131 units. So if you calculate the months of inventory, that's 60 months of supply, okay? Usually the resale market, if we have like, months of inventory like 3 or below, it's a good market, right? 5 and above, it's a slow market. In the pre-construction, the remainder inventory market is not even just 10 or above, it's 60 months. It takes 5 years for the builders to get rid of the current inventory they have on hand. 5 years, not like 5 months. So it just to show you how important it is to know that, right? There's a lot of inventories builders trying to get rid of, and they cannot, and they're likely competing with you to try to fight for those buyers, same buyers, okay? So because of the whole situation with like the real estate market, the job market, and the economy and the tariff and how the tariff is impacting Canada, on the financial market, this is an interesting graph from Stats Canada. You can see that Canada saw 16 billion of capital flee, money leaving Canada, right? 84 billion over the 4 months. So it's saying that net outflow of funds from Canadian market, this is not a real estate market, this is like a financial market, okay, are going down. You can see in the history, it's always been like up and down, right? But the most recently, it's rare to see a consistent outflow of capital from Canada. People are just losing confidence in Canadian economy. And the headline is basically saying that Canadians are buying more American stocks, selling domestic, right? Which is true. Like if I think about my personal stock investment ideas recently I've had in 2025, majority of those stock trading has been on US stocks, and Canadian stocks are either just buy and hold and keep them for the long term or selling them off, right? Like in my personal portfolio. So multiply that by everybody. That's why we can see people in the financial market is having less confidence in Canadian economy. And that's showing in the past 4 months, because the past 4 months has been especially bad with all the tariffs and elections, all these changes, right? So in the end, this is the final piece of data I wanted to share with you, is that Toronto mortgage delinquencies tripled, highest in over a decade, okay? This is saying that right now in 2025, our delinquency rate is at 0.22%. Last time we had this high was 2014, that was post-financial crisis. And in the middle, we haven't seen delinquency rate being this high. But that said, this news, it does look concerning. But to me, it's not overly concerning yet, because even though we have been on the straight line up, which is understandable, there's some people gotta fail on their mortgage payments when our interest rate has been going up and people are renewing their interest. And they probably bought it, a lot of them bought it when the real estate was very expensive in the past 5 years. There's got to be some people failing to make payments. But the overall absolute number at 0.22%, not even 1%, and that's in Toronto, not even the whole Canada, is really low. If you compare that number to the US, it's probably like 2-3% easily, right? But in Canada, thanks to our robust financial institutions and their strict mortgage lending rules, we are still generally okay. Like even though it's upward trend, but our absolute number for delinquency is still low compared to like other countries, right? So that gives me a little bit confidence that we're still okay, but it's a trend definitely worth watching, and be prepared if this goes up more and becomes a concerning factor. Just something to keep an eye out for. Okay, that's all I wanted to share with you this episode, and hopefully this can help you to better understand what's going on in the market, especially in the pre-construction market, which I think is a very important sector, because pre-construction usually is a leading indicator of what's going to happen down the road for resale market and rental market, right? So if you like this kind of content, stay tuned, subscribe, and until next time, ciao.